The large cap stock like Dow Jones, S&P and Nasdaq are doing pretty well despite of the bank run, but not quite for the mid to small cap stocks. And where can you find them? In S&P 400 and Russell 2000. Now, this will be the two questions that we will be discussing today. Number one is, so what's happening on this divergence and its implication? And number two, who is leading who? Now, is the large cap leading the mid to small cap stock market, or could it be the mid to small cap stock are leading the large cap market? Now, my answer is, I believe that the mid cap stocks to the small cap stocks will be or is leading the large cap stock. It means that the large cap stock ultimately may come under pressure, just like what we're seeing here today. But before we discuss these two key questions, please do take some time to read into the disclaimer below. Now, so what is happening to this divergence? And we're seeing divergence here where the mid and small cap stocks are moving down, whereas the large cap stock are moving up. Now, first, we have to understand that the large cap stocks for S&P 500, their requirement for every stock is at least 12 billion US dollars. And for Nasdaq and Dow Jones, their requirement is even higher. So they're good. And there are 630 of them. And whereas for the mid-cap stock in S&P 400, the requirement to be listed is at least a size of between 1 billion to 10 billion US dollars. And for the Russell 2000, consider the small to mid-cap, their requirement for every single stock is between 50 million to about 4 billion US dollars. And again, we're seeing a divergence. It means that with the bank run, and the mid-cap stock and Russell is still moving down under pressure, whereas the large cap stocks are moving up, and there are 630 of them. Now let's do the sum right now, and let's look at the overall US stocks. How many do we have? And according to the Wall Street Journal, NYSE had a total of 3,080 stocks about there. Now, while the Nasdaq has about 4,700 stocks. Now that is making a total of 7,780 stocks in the every exchanges in the United States. Now, so it means that the total value over the last 2 years, maybe 3, is swing between about a value of about 40 trillion to 50 trillion US dollars. Now, we will usually take interest in the popular stocks that we can find in Dow Jones 30, S&P 500 and Nasdaq 100. Now to add all these up, which is 30 plus 500 plus 100, we have a total of 630 stocks. And of course, some of these blue chip stocks are duplicated between the indices. And let's do the sum again, is that if we're going to take 630 blue chip stocks minus of the overall, which is 7,780 stocks, and so what's happening to the rest of 7,150 stocks that is moving downwards as we're seeing here today? So what's happening to them? Now, and who do we have? Let's discuss about who do we have in S&P 400. We have names like Wendy's, I love their burgers, Under Armour, Southwest Airlines, and Ralph Lauren's. And who do we have in Russell 2000? And again, it's all the very popular names. We have AMC Entertainment, Beyond Meat, Zoom, and DocuSign. Now, with this divergence between the mid to small cap stocks and the large cap stocks, what is the implication? Now, it is demonstrating to me that this small cap stock, where there's 7,150 of them, are not doing that well. And if the recession hits, which I think that more likely than the case that recession is going to come soon, now these mid-cap to small-cap company will face a much tougher time than those of these 630 stocks where they are blue chip stock. Why is it so? Because this blue chip stock, they have been preparing for this high inflation, high interest rate, and possibly recession to come. Since the year 2020, 21, 22, they have been hoarding cash. I think they're well prepared for this, but not for the mid to small cap stock. Now, at this point, I only can make an assumption here is that if recession hits, hypothetically, the 7,150 stocks employing the majority of the workforce in the United States or employee in United States compared to the 630 stocks will be the most affected. The mid-cap stocks and the small-cap stock and their employees will be the most affected. Now, this is a huge workforce, and they can be considered as the mass consumer as well. Now, the key is this. The large cap stocks, which is S&P 500, Dow Jones, and NASDAQ, 630 of them, their business depends on the mass consumer. Now, if the mass consumer start to tighten their belts in the context of recession, the large cap stocks revenue will be affected subsequently as well. And that's the reason I believe that the mid cap stocks is leading the large cap stock this time around. Now, to better time the market, not to forget to also monitor the S&P 400 and Russell 2000. And that's what I'm seeing here. Since the bank run started in March, it has broke the uptrend line and it has still stayed under. If we look at the Russell 2000, we will have the same reading. But the NASDAQ, or rather the NASDAQ, Dow Jones, and S&P 500 is staying quite well above. But I believe when recession hits, all this mid to small cap stock will stay under a lot of pressure, and subsequently the large cap stock will follow as well. And I think this demonstration is really interesting. I've included the past tutorial relating to today's discussion and its links below. Keep watching it again and again. You too can get into the market with greater precision. Always enjoy studying the correlation between the markets and to uncover potential opportunities. And I hope today's sharing, it will be helpful in how we invest and trade. Really happy that you stayed through this video. You have many great trading weeks ahead.